Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing well. Things are looking up for Mizzou basketball, so that has me in a happy place. Finally cracked back into the AP Top 25, and
That's right. That's
yeah,
right. Got back in there. Tournament starts this week.
yeah, yeah.
It's nice
So,
to have that. It's nice to have that first two round bye. So
yep, yep. Although it's going to be fun because I'm going to be happy until after the first or second round of March Madness, and I'm just going to be all up in arms again about how bad Mizzou basketball is. So.
this is the turn.
Yeah.
Turn.
It's been a good year. Good kind of flipping of the events. I know I was watching kind of across the Midwest. A lot of teams play the other day. Saw Indiana barely squeak out against the team up north up there. Lot of action going on that could
Yeah,
determine some seedings. So kind of nice. I never root for Texas unless we're playing Kansas. Could see Texas take down KU, so that's fun.
that's right.
Yeah.
That's gonna be a good matchup. Texas and KU. I think they're really good. They're really solid. They could meet each other in the Big 12 tournament finals. We'll see.
The Big 12 top to bottom is just crazy how good they are, honestly. I mean, they're just so deep this year. So it'll be really interesting to see what happens in the Big 12 tournament there. So
Yeah.
but anyway, looking at the commodity markets really across the board, we're kind of softly lower as we start the day today. So Ben, what's the change been like over the last week or so?
Yeah, so as we've turned the calendar to March, the new crop soybeans for May down 6 cents week over week to 637. That was old crop corn. Old crop corn for May down 6 cents to 637. New crop corn down 2 cents to 570. Old crop soybeans for May up 17 cents to 15.29. New crop soybeans up 18 cents to 13.79. Soybean oil was flat week over week. Soybean meal was up $11.50 per ton to trade just around $493 per short ton. Again, that's very high levels. Old crop wheat for May down 15 cents to 6.95. New crop wheat down 12 cents to 7.03. And then that West Texas Intermediate crude oil was up $2.50 per barrel to just about $80.
So we're seeing a lot of these commodity prices soften, like you said, as we came into March. What's been the big driving force behind that?
Yeah, a couple of things. U.S. ethanol production pulled back slightly for the most recent week, with gasoline demand up 2% week over week and lower production. Ethanol stocks were reduced 34 million gallons. Many private estimates for South America corn and soybean production were out last week. The trend continues. The smaller Argentina crop continues to shrink while the larger Brazilian crop continues to grow for most estimates, not all, but most. It's worth watching that planted acreage forecast for Brazilian corn. Ag export sales were down week over week for corn, soybeans, grain sorghum, total wheat, cotton, and rice. All were within pre-report expectations, but most of them were on the lower end of expectations. Export sales continue to present headwinds to the commodity markets. Also, that U.S. dollar index has picked up recently. Again, if we look both in terms of just the index itself and then the trade-weighted dollar value, that's going to present some headwinds here the next couple of weeks. And then ag export inspections were mixed on the week. Corn exports were up week over week and bullish to the market. Soybean and wheat exports were down week over week and bearish to the market. And then grain sorghum shipments were down but neutral to the market.
So really going off what you just said there, obviously a lot of commodities have been trading at the lowest or the lower end of their expectations, and it's kind of led the U.S. market into a little bit of a push downward, kind of falling back. So really, where do you see the U.S. market heading out from here? What will it take to really get out of this trade rut?
Or are you talking about exports?
Yep,
Yep,
exports.
yep. Well, smaller stocks in some of our competing countries, would certainly help prop up some trade volumes. I don't think we're going to see that. I think Brazil's going to produce enough for Argentina to make up that deficit, but then also to fill some of the deficit that's being left in the Black Sea region. Certainly, when you look at Brazil's export figures here lately, their soybean estimates have been down a little bit from normal. Again, that's because I think we're seeing some of that soybean crop not only be delayed but flowing to flowing to areas of southern Brazil where they need the soybean meal for livestock feed and things like that. So, for at least the time being, Brazilian soybean exports have been down, but I certainly look for those to pick up in a very big way here, probably by the time we get to some next reports. As far as Ukraine and Russia, that deal comes up, or the grain corridor deal comes up for expiration here March 18th. Talks are kind of happening privately with all different parties, but not together. So we'll see. I do anticipate that deal to get extended another 120 days. That to me seems like the most likely outcome as we look ahead. But certainly, if that were to cease, then we'd probably see a pickup for our feed grains, both in terms of export values and then prices in general. So, those are things that I think could potentially help on the export trade front. But for the time being, very soft exports. We've just not seen that Chinese demand develop that many people were talking about in February. Especially for U.S. crops, and we remain at a premium relative to other countries. So there's just not the incentive for countries to buy product from the United States.
Yeah, it seems like there's so many headwinds, like you mentioned, they're stacking up against favorable exports to really make it any type of plausible outcome. Because you're seeing the U.S. dollar kind of create a bigger challenge, I guess, for making those exports competitive on the market. And then, prices are still extremely elevated when you look at, some comparisons, across the board of where they could be when you're looking at, like you said, competition from South America. So looking outside of just commodity crops themselves, looking at some of the, residuals like ethanol, it's also hitting the ethanol market on some of those exports. Really, where do we see the ethanol and biofuels markets sit right now as we look at where those might be going?
Yeah, great question. So a couple of things. I'll just start out on the export side for ethanol. I really think we'll see some more ethanol exports in the years ahead. I think that's an area that's going to continue to grow for us, and we continue to export that product to new countries, and some of our countries that currently buy from us continue to expand their market share. We saw probably not record levels, but certainly elevated levels of exports of ethanol and biofuels in general last summer. April, May, June, that was a very strong period for us. We've come back down since then on the export of those physical commodities, but certainly I think international companies or countries, not companies, international countries are going to step in and kind of fill some of the gap on the ethanol demand side of the picture. On the U.S. side, gasoline sales are up week over week, 2%, but we still remain relatively, soft to historical standards on gasoline demand, and that's with gasoline prices coming back down. In large parts of the country, we're seeing gasoline well below $4. It's below $3 here in Colombia, but on national average, it's pulled down quite a bit. But that really hasn't spurred people to get out and drive as much. We'll see what this summer driving season looks like for consumption, but I certainly anticipate it to be down from what we saw pre-COVID. Just not returning back to those levels. I think there's a number of things that contribute to that, structural changes. But certainly, I think a little bit softer ethanol demand, even than what USDA is currently forecasting, I think is in the picture for our current marketing year as we look ahead. So. Softening demand on the corn side, maybe slightly growing demand on the soybean side for our current marketing year, even though we just got done talking about the kind of the negative headwinds or the headwinds for commodity markets due to export potential. I actually think USDA might revise soybean exports up as we get the supply and demand estimates this week. We had an extended export wheat window. We took advantage of that as a country. And I think as a result, I think we could even see stronger or a revision upward in those export sales this week, or those export estimates this week.
Well, and talking kind of, I guess, broader picture and longer term trade expectations across the board. Well, one of the I guess sticking points right now we're seeing between the U.S. and Mexico specifically, still ongoing conversations around the biotech ban that Mexico is looking to implement and enforce. We're seeing the United States Trade Representative's Office get involved there, I guess increase involvement there. And Tom Vilsack commented on that as well, talking about the importance of that relationship. So how many different scenarios are there, I guess, as it comes to the impacts that it could have on farmers on how these negotiations go for longer term trade stability?
Yeah, so the big debate, and I think it's important to recognize what that big debate is. So the big debate here is, a country, or preventing a country for telling us what to do, right? Like I think that's kind of at the root of this matter. Maybe others would disagree with me on that, but I truly think that's probably what's at the root of this. I To shed a little bit of light on what we're talking about, we export 10 to 15% of our corn crop, if at the most, right? 10 to 15% of what we produce gets exported globally. Mexico is our largest international buyer of corn. They currently, they represent anywhere between 35, well, let's just say roughly 35% of what we export to the world, right? So we're talking 35% of that 10%. And so now you're talking about 3.5% of our total corn crop is what Mexico buys. So certainly, Mexico is a solid trading partner for us. There we have logistical and just competitive ties between them to where we fit really well into their market, and I think they would like to buy product from us. So now the question becomes, okay, if they put this ban in place for human food consumption, what does that mean for our corn market? We send them a lot of white corn already that's used for human food consumption. Most of that white corn is already non-GMO, so there's not a huge change there. If they were to extend that ban and go back to kind of their previous announcement or whatever, that even the feed grain corn, which is our yellow corn, largely goes to their livestock sector, right? What are we talking about in terms of acreage shifts? Well, it could mean about 3 million acres, 2.5, 3 million acres of corn, conventional corn, yellow corn that we currently grow in the United States, switching to non-GMO yellow corn. So that's not small. When we talk about millions of acres, that's not small. But I just wanted to put that into perspective in terms of what that would mean, or what that would look like for us in the United States. It's not all of our corn going to non-GMO, but it's certainly a portion of it, and it could grow potentially. Mexico, we anticipate, will continue to increase their meat consumption. As a result, they'll probably need more corn. So the outlook there is maybe for growing corn to Mexico, and certainly, if they were to go forth with this ban, even for feed grain corn, we'd look at even more acreage, maybe 3-4 million acres of corn that would be needed, extra non-GMO corn. So, again, I think the root of this is we don't want a country telling us how to grow our product. But certainly, I think there's probably quite a few producers out there that would be willing to grow that non-GMO corn at a premium. And if Mexico would be willing to pay for it, I certainly think we could do it. I think we could switch 3 million acres relatively easy, because if you look back to the 1990s, and I'm not trying to make light of this, please don't read it this way, but if you look back to the 1990s when we were kind of adopting GMO practices, we were switching 3.5-4 million acres every year to GMO technology, and so I think certainly we could meet their gap pretty quick. Yeah. Well, not this year, but in future years potentially.
Well, and what's interesting, I think it would potentially do two large things that you talked about. Obviously, build in a premium for that non-GMO product once again going to Mexico, but it could set an interesting precedent with other countries looking at establishing a different trade relationship than currently exists between the U.S. and that country. Trending more that way, potentially to where you see a lot of the GMO I guess not phased out, but trying to be a negotiating piece with other countries as well. So this is an interesting precedent that's going to get potentially set between the U.S. and Mexico, depending on the outcome. So, Ben, looking forward to the rest of the week as we're in our first full week of March now. What reports, things should farmers and ranchers be paying attention to?
Yeah, so the big reports this week are Wednesday, when we get the latest update of the world supply and demand estimates. Again, my forecast is decreasing demand of corn, increases domestic stocks, and then slightly increasing demand for soybeans, decreasing ending stocks. So growing supplies for corn, shrinking supplies for soybeans domestically. On the international front, I think we'll continue to see adjustments or revisions downward in those Argentine corn and soybean crops, maybe by 3 million metric tons again here in March. And then Friday, we get the U.S. ag trade data for January to give us an indication of our products that we're sending, values and volumes.
All right, Ben, it's always a pleasure getting to pick your brain and all the knowledge inside of it. Viewers, listeners, if you'd like to learn more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.